Let's look at Tesla's first quarter presentation. Free cash flow in the first quarter was $2.2 billion. Free cash flow is operating cash flow less capex. And their total debt is only $100 million if you exclude financing. Because not everybody can afford a Tesla, so some people get financing from the company. Their operating income was $3.6 billion with a 19% margin. Net income was $3.3 billion, but if you strip out stock-based compensation, that's $3.7 billion, and 33% gross margins in the first quarter. Their factories in Texas and Berlin started delivering cars this year. The first quarter was a record quarter in terms of revenues, vehicle deliveries, operating profit, and operating margin. And as you know, there's been lots of supply chain issues, so they're trying to diversify their suppliers. They mentioned chip shortages, and the recent breakout of COVID-19 in China has really affected them. They had to shut down their factory in Shanghai. They increased prices on their cars due to inflation and the high cost of raw materials. Their automotive revenue in Q1 was $17 billion, up 87% year over year from $9 billion. It's up a little bit from the prior quarter. Regulatory credits are up to $679 million. That's up 31% year over year. The state of California and 13 other states provide subsidies, and those subsidies are mainly focused on reducing the CO2 emissions. Gross profit of $5.5 billion, up 132% year over year. Their gross margin is up to 33% compared to 26.5%. That's 6.36% higher, or 636 basis points. They generate revenue from other sources. They sell solar panels, they also do insurance. Total revenue is $18.8 billion, up 81%. Gross profit of $5.5 billion, that's up 147%. And their total gross margin is 29%. So their auto margins are much better than the margins in their other businesses. They're actually losing money overall in the other businesses. I'll show you later. Expenses are up 15% to $1.9 billion, but as a percent of revenue, they're much lower in Q1 22 compared to Q1 21. Operating income is up sixfold, or 500%, and operating margin is 19% compared to 6% last year. Adjusted EBITDA is $5 billion, up 173%. GAAP net income is $3.3 billion. Non-GAAP, when you add back stock-based compensation, is $3.7 billion. Both up a lot year over year. GAAP EPS is $2.86, much higher than prior quarters. Operating cash flow up 143%, free cash flow up 660%. Total revenue grew 81% year over year to $18.8 billion. That's mainly due to growth in vehicle deliveries, higher prices they charge per vehicle, and also growth in other parts of the business. The Model S and X, they sold 14,000 cars in the first quarter. The average price is about $100,000. The Model 3 and the Model Y average price is $50,000, so they sold a lot more, $291,000. That number is actually lower than Q4 2021, but revenue is higher because they raised prices. These numbers are production. Actual deliveries is 14,700 and 295,000, so they delivered 310,000 cars. Each quarter they deliver more cars than they make, except for the second quarter of 2021. They must have lots of cars in their inventory from 2020 in order to fulfill all these orders. Of these 310,000 cars, 12,200 were leased. At the end of the first quarter on their books, they had 128,400 cars on lease. And they provide lease terms between 2 and 3 years. So these people are in debt to Tesla and have to pay a monthly payment until they complete their lease term. So Tesla does bear some risk. Some of these people may default on their loans. Their supply of inventory is down to 3 days, which is a lot lower than prior quarters. In the first quarter, they deployed 48 megawatts of solar. A megawatt is equal to 1 million watts, which is about the amount of energy 500 homes consume in a year. They have 846 megawatt hours in storage. They make money by putting solar panels on people's homes. They also have a huge network of solar charging stations. I'll show you later how much revenue they generate from solar. They have 3,700 charging stations with a total of about 34,000 chargers. They own and operate the largest global fast charging network in the world. And they're up to almost 1,400 charging vans. That's slightly more than Q4 2021. They manufacture Model Y cars in Austin, Texas. And these cars use their 4680 cells. 4680 refers to the battery dimension. It's 46 millimeters wide and 80 millimeters tall. This is their top of the line battery. They said it's 6 times as powerful as their previous batteries. The Berlin factory uses their 2170 battery, but the goal is for that factory to use the 4680 in the future. They manufacture the most cars in California, Model S and Model X 100,000, Model 3 and Model Y 500,000, and Shanghai is about 450,000. They've only made a small amount of cars so far in Berlin and Texas, but in the future there's a Cybertruck, Tesla Semi. That's an EV semi-truck and it's going to cost between $150,000 and $180,000. And the range is 300 to 500 miles, and also the Roadster and other future projects. Currently, over 2.5% of the cars on the road in US and Canada are Teslas. For a while, it was well under 0.5%, and their growth has been phenomenal in every single region. Their full self-driving cars may be available this year. They're currently working out all the software kinks. In Q1, they added a mobile app for climate controls. They also improved charging time estimation and battery temperature. About half the vehicles produced in Q1 had lithium iron phosphate with no nickel or cobalt. They're trying to lower prices and cobalt is really expensive. Compared to the other vehicle manufacturers, they had the worst operating margin at the end of 2018. Now they're by far the best. A lot of it is due to higher demand after the Super Bowl. Energy storage has increased 90% year over year, mainly due to Powerwall. Powerwall is a home rechargeable battery system. It stores energy from solar or from the grid and makes it available on demand. Solar panels for people's homes have decreased 48%. That's mainly caused by import delays. You see in Q1, services and other gross margin remain close to break even, negative 0.6%. So for their non-vehicle business, they're still losing money. Their gross margins have improved over time. It was as bad as negative 40%. It's getting close to break even. They expect a 50% average annual growth in vehicle deliveries, and they do mention they're making progress on their Cybertruck. That's being made in Austin. Here's a picture of the Berlin factory, the Berlin assembly line. This is a pretty sleek picture of their body shop. The Model 3 uses 171 pieces of metal. Aluminum is the main metal used in the body structure. The Model Y in Austin only uses 2 pieces of metal. Here are some of their quarterly stats. Vehicle deliveries have gone up a lot. They're pretty much flat quarter over quarter, but I think a big reason they're flat is because the prices are a lot higher this quarter than the prior quarter. If they didn't increase prices, I'm sure this line would have been a lot higher. In the past 12 quarters, only 1 quarter had negative operating and free cash flow. The blue line is their net income. That's higher than ever. Same thing with adjusted EBITDA. These are the same 3 charts as the prior page, except it's trailing 12-month numbers. For the first time, they broke through 1 million car deliveries in the trailing 12 months. This is their income statement. In the first quarter, car sales were 15.5 billion. Total automotive revenue was 17 billion. They received 616 million from energy and 1.3 billion of other. Insurance and merch are part of other. The cost of sales is 11 billion. That includes all the costs to make the car and to deliver it to the customer. 400 million in leasing costs. So auto cost of revenue is 11.3 billion. The expenses for energy are higher than the revenue for energy. Same thing for services and other. But they still have their highest gross profit ever at 5.5 billion. 900 million of R&D, 1 billion of SG&A. So their operating profit is 3.6 billion, 1 billion more than last quarter. Their EPS is $3.20, almost $1 more than last quarter. Their shares outstanding do increase a little bit each year, not too much, 960 million to a little over 1 billion. This is their balance sheet, current assets of 29 billion, current liabilities of 21 billion. So their current ratio is above 1. Total assets 66 billion, total liabilities 30 billion. So they have 34 billion of equity. And this is their statement of cash flows. 4 billion in operating cash flow, 2.2 billion in investing cash flow. Most of that is CapEx, 1.8 billion. In their financing section, they paid down 1.4 billion of debt, another 630 million of debt. So there was a cash outflow of 1.9 billion in their financing section. These last 2 pages reconcile GAAP to non-GAAP financials. Their GAAP net income is 3.3 billion. They just add back stock-based compensation, and that's how they get non-GAAP net income. And to get adjusted EBITDA, you take net income of 3.3 billion, add back interest expense, taxes, depreciation and amortization, stock-based compensation, and that gives you 5 billion adjusted EBITDA. So their adjusted EBITDA margin is 27%. which is their highest ever. Free cash flow is a non-GAAP item. Operating cash flow is a GAAP item. So to calculate free cash flow, it's just operating cash flow minus CapEx. GAAP just means it's required under the accounting rules. So I hope you learned more about Tesla from watching this video. Let me know what you think. Give this video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.